Let's take a look at some information and charts on Maker DAO for BraveNewCoin. So Maker is a lending and borrowing protocol, potentially in the sights of regulators in the US, specifically the SEC, which, based on Brian Armstrong and his tweet thread about Coinbase's lending product, looks like the SEC will be moving sooner rather than later on stuff like this. So my guess is KYC AML is coming for stuff like Maker, Aave, Compound, as well as geofencing, accreditation, all sorts of regulatory stuff is coming. So keep that in mind. But in the meantime, we can enjoy what we can enjoy. And you can mint DAI at your heart's content, connecting to the Oasis app using various vaults here, various collateralization minimums. Now in general, I think for most people, the vault stuff is probably too complex, honestly. You know, if it's not as simple as Aave and Compound to just 2-click, boom, you're done, people will probably shy away from it. You know, they're just going to use the path of least resistance, which is fine. I just think that's part of the reason why the market share for lending and borrowing is shifting towards Aave and Comp and away from Maker, at least over the past month. You can see there's tons of vaults here, tons of pools. You know, it gets complex pretty quickly for people who don't do this thing on a regular basis. We can take a look at the Maker total supply, currently at 6.5 billion, roughly. Sorry, DAI supply. And if we look at the constituents, much of that is USDC, which, depending on how you feel about that situation, means that there's increasing centralized aspects to Maker. Although it helps with DAI volatility, it increases centralization. I could see a world in which SEC goes after USDC and says, you need to make sure everybody using this is KYC AML, you know, something crazy like that. It's certainly affecting the DAI supply here. Initially, Maker was just ETH, and the DAI volatility was extremely high. It wasn't really a stablecoin at all. I'll look at the volatility lately, but it's been more and more of a stablecoin as the underlying is USDC, which makes sense, right? The DAI stablecoin underlying is a stablecoin called USDC, which permanently has a redemption at $1. So the market price of any stablecoin could be variable. So long as the redemption is $1, ultimately there isn't a risk or a perceived risk. You know, I think a lot of people mistake market price for redemption price, something I've talked about a lot with Tether in the past, but so long as the redemption price is $1, it doesn't really matter. So as long as USDC is $1, it's whatever, right? It's just at what point, it's like the ship of Theseus. At what point is a percentage, like let's say this goes 75% plus DAI, or 75% plus USDC. At what point does it just make it not worth it, right? Like it's a rehypothecation of USDC, basically, at that point. But it's currently around 50% USDC. They do have a burning program that we can look at, and they haven't really burned anything since May. So if this starts to uptick again, if they start burning more, then I expect price to respond positively to that. But as it sits right now, it's not really burning too much, if anything, since May. We can look at borrowing and lending across Maker, Comp, and Aave, like I've alluded to already, and Maker is currently 25% of the total, whereas Comp and Aave have a growing slice of that over the past month. Borrowing volumes in general at all-time highs, though, way past what they were in May this year. Liquidations are pretty much just happening on Aave. The other day we had pretty large liquidation spike. 81% of that was on Aave. If we compare that to what happened in May, most of it was on Aave and Compound relative to Maker. So if I'm paying attention to stuff like this, as a user of the three of these, right, there's a reason why Aave has higher liquidation rates than Maker. Maybe the collateralization is less, maybe they've looser restrictions, I don't know, but that's certainly something worth looking into if you're using Maker, Comp, or Aave. We can also look at protocol revenue over the past 30 days, and we can compare DeFi protocols that have protocol revenue versus supply side revenue, which is based on volume. Maker has the second highest protocol revenue. I actually didn't even realize Sushi has has a higher protocol revenue than even Maker, which Maker only has protocol revenue. Aave also in the scrum there at 45 million over the past 30 days. If we turn on everything, UniSwap by a wide margin has the most fees over the past 30 days. So this is one way to analyze the group. Who has fees, who's collecting fees, what's supply side, what's protocol side. There's been some talk of Uni switching some of this eventually to protocol revenue baked into the protocol itself. Hasn't happened yet, unlike Sushi, where they already have that protocol revenue running. And we can also look at market cap over annualized revenue, get a PE ratio equivalent. Aave's down here at the bottom with Sushi, Compound, Uni, kind of the big four in my mind. And then Maker now is out here as an outlier along with SNX, Balancer, Curve, Bancor. And in general, people focus their buying power, their capital on stuff on the left side of this curve rather than the right side of this curve. This indicates overbought or overvalued. This indicates undervalued, oversold type of mentality or sentiment in the group. If we look at Maker transaction counts, basically at multi-year lows. I mean, effectively, they're going lower and lower and lower. Much like many DeFi tokens, there's just no reason to move this around most of the time, unless you're using it as collateral somewhere, especially with ETH fees as high as they are. And average transaction values skyrocketing here on Maker. So virtually no transactions, and all those transactions that are occurring are incredibly high in value on any given day over the past few weeks, really. NVT and active addresses have continued to decline again to multi-month, multi-year lows. Not bullish for most things that are currencies. NVT is declining, which means on-chain activity is picking up relative to market cap. So NVT is certainly more bullish than transaction counts and active addresses. I mean, to see this in transaction counts from the highs, it's just like there's nobody left. There's nobody home. No one's speculating on Maker anymore. If we look at MVRV versus price, MVRV is a direct measure of market cap versus on-chain activity. And in general, most coins top out at a 2x multiple. So the price for Maker's in the line there, MVRV in the fill. And most recently, basically when we had relevant data, because prior to January, nobody touched Maker on exchanges, really. Nobody did anything with it. After January, there was a DeFi renaissance, a DeFi awakening, and lots of stuff picked up steam. So in February, we had a 2x multiple, price kept going, and we saw a 1.5 multiple. So anything above 1.5 in the future going forward, I'd get concerned for overbought conditions. Currently it's at 1.15. If we sort of zoom in a little bit, you can see that maybe a little bit easier, but if you're trading or holding this, I would just in the periphery pay attention to this. It's a good indicator or sign for overbought, oversold conditions in general, even with something like Maker, which doesn't have a lot of on-chain activity to begin with. If we look at all the stablecoins and their prices at $1, this is market price, not redemption price. DAI is, where is it at? It's the blue one. Okay, so it's the blue back here. And you can see after March 2020, volatility was on a downtrend and has been on a downtrend. GUSD, I think it's the purple here. Crazy volatile. I don't really know who trades that directly, but the market price is all over the place. Just going to take that one off the graph, simplify things, zoom in a little bit. All the stablecoins have actually done fairly well recently with prices in and around $1. Looks like PAX most recently dipping decently below $1. There's been, always concern about Tether and holding what they're holding, commercial paper and Tether FUD and all this other stuff. They may have a history of not being on the up and up, but recently everything's been relatively stable compared to where it was prior to 2020. And the DAI stuff just continues to get more and more stable over time, which makes sense if most of it's USDC, like I already said. If we look at the technicals for Maker, this is the 1 year MA in the green, MA multiple in the red here is the 5x multiple. The white line is 2.5 times multiple, so it's the midline basically. And it did hit the multiple twice here in March 2020 and May 2020. Currently it's nowhere near the buy zone or the sell zone, but if this thing dips below 2K, it'll get into the buy zone. Currently projecting a potential target of 10K plus for another, let's say everything has another run up. If Maker enjoys that bull run as well, 10K would be the target based on this indicator, which historically has done decently well at telling you buy zone, sell zone. Not a lot of data, I know, but got to start somewhere. Looking at the 5200 monthly pivots, VPVR and RSI, 5200 is still bullish. It's been bullish since mid 2020. It's Price is currently at the 200-day moving average. It's at the S1 monthly pivot. It had a pretty nasty pullback along with everything else over the past couple days. Most of the volume on Bitfinex is basically at 700. I mean, on Bitfinex, for 3 years, it kind of just did nothing sideways. It formed this like massive inverted head and shoulders that eventually broke out. But as far as support is concerned on the downside based on volume, 700 is the big line in the sand. Anything above that is kind of just free floating relative to all of the volume in and around 700. So trend is still bullish, looks okay for bullishness over the next few weeks. Just definitely needs to hold that 200 period moving average. On the cloud, it is threatening a bearish Kumo breakout after arguably a successful edge-to-edge move up here. I just zoomed way out to show like this is when you don't use the cloud, when there's nothing going on. It's extremely random walk, turtle soup, volatile, in a tight range. The cloud isn't going to help you here. Nothing really is going to help you here. You want to use the cloud when stuff's trending. So ideally the entire market, crypto-wise, trends in October and beyond in Q4 and does well. Now, if I'm wrong about that and this thing actually has a run in Q1, which I don't really think is going to happen based on tax purposes, I expect anybody holding anything from Q1 2020 to be selling in Q1 2022 for tax purposes. But let's say I'm wrong, right? Let's say there isn't a bull run in Q4, or there's a bull run in Q1. We'll still see that like we did in January with a bullish Kumo breakout. You know, it's going to be obvious when it happens because just like it was semi-obvious with 3 years of nothing into a massive new high, we're going to see the cloud flip. We're going to see trend metrics stay bullish or flip bullish after being neutral to bearish for 5 to 6 months before that. So we'll know by October what the true story is here. Maker BTC, ranging mess. Generally wouldn't touch it. Doesn't really look bullish or bearish one way or the other. Just kind of sitting flat in this range at the VPVR expected level. And Maker ETH looks super ugly with this head and shoulders bearish 5200 cross below VPVR levels, breaking a range. It does not look good. Definitely looks like it's ready to test all-time lows. And for me, if I want to test or catch knives, which I rarely do, but if I do, I'm looking for a mega lower low on crazy volume with a bull div. So hopefully, if this thing does bottom, it'll do so around 0.666 probably, with a bullish divergence on volume, just a capitulative level of volume. Now, fundamentally, does it make more sense to hold Maker over ETH? I don't know, right? I think you're seeing that play out on the chart here. Historically, it's only been down since 2019. It's pretty much been held below the 200-day moving average ever since, and most of the volume is now resistance on the upside. So as far as buying a knife, it sounds good, but I don't know about long-term bullishness beyond just a mean reversion play. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio I trade for Techemy Capital at Enzyme.finance, a non-custodial portfolio management tool where you can see everything including AUM performance allocation, all the yield plays I'm making here. Maker is in here somewhere. I think it's down here. Yep. So it's at a 3% allocation currently. You can also see all the trades I make in the trades tab down below. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.